Happy New Year. Talking about 2022, some predictions by Logan Mahtashami, he really has grown on me, one of my favorite now economists out there. He's talking about 2022 and the housing market being still a phenomenal year. His predictions are that property values are going to continue increasing between 5 to 6.5%, which is much, much healthier than 2021 that will most likely end around, on average, 13%. He also talks about, and I actually like that comparison, he talks about economy being like a Titanic in the middle of the ocean. It takes a long time to actually steer and move it and maneuver it, unless an iceberg of COVID-19 happens. And then what? Our ship did not sink, neither in 2020 nor 2021. Why? Because of two factors in the housing market specifically that are present now, have been present last year, and are predicted to be present next year as well. And those are demographics and mortgage interest rates. According to Mahtashami, demographics, obviously the largest group right now within the U.S. population are those between 28 and 35. I didn't look this up, I read this. And because of this, being the average age for a first-time home buyer, these people are going to be coming in, even in larger numbers than this year, to buy into the American dream, to buy real estate. So demographics are not going to change. As far as mortgage interest rates, Mahtashami has a much bolder prediction than most economists I'm reading. Most economists are saying mortgage interest rates on a 30-year fixed loan are going to end somewhere around 4% in 2022. Mahtashami says that he does not see these rates going any higher than between 3.5 up to 3.75. And he also has a low range for interest rates. He says that depending on what happens with global economies, we might hit under 3% maybe again. Wow, wouldn't that be awesome for some of us, right? Those that need to refinance our mortgages. But on a serious note, we're gonna go in depth into predictions for what 2022 should look like in our housing market. For the time being, we know that the demand is high, the supply is still low. Anytime there's a supply of homes is under 6.5 months, it is a healthy, growing economy and housing market versus where we're at, which is somewhere around 2 months. In some areas, even under 2 months of supply. In economic news, this shortened week last week, we had the personal consumption's expenditure report that showed inflation up 0.6% in November, which now on an annual scale went up from 5.1 to 5.7%. And that is, by the way, the highest reading in the last 40 years. Additionally, existing home sales rose 1.9% from October to November. They are now at a pace of 6.46 million units. Mahtashami, quoting him again, says that anytime there is more than 6 million homes being sold, that is obviously a sign of expanding housing market and expanding economy. As far as new home sales, those were also up 12.4% from October to November. But specifically on new construction homes, it is very important to understand that these are going to be tied a lot closer to mortgage interest rates movements than existing home sales. Why? For one, new homes are typically more expensive than existing homes of the same size. And for second, right now, developers, builders alike were able to increase their prices faster than even existing home prices because of the low interest rates and the affordability factor. So when interest rates go up, even a tiny notch in the new construction arena, what will happen is developers' profit margins are going to dwindle and less construction will start happening. In other news, in the labor force, 2.137 million people are collecting unemployment collectively, and that is pretty much back to the levels of pre-pandemic. Finally, gross domestic product, another revision for the third quarter showed increase from 2.1 to 2.3%, but it's still anemic considering all of the stimulus that was given to all businesses. That's all I had for this week's economic update. I will talk to you in a year, 2022. Have a great, happy, and safe celebrations of the New Year's.